Alright, let's do this. So welcome to my video. My name is Liquidity, and in this quick video I'm going to tell you how to use strong wick rejections to your advantage. If you find this video useful, like this video, comment and subscribe to this channel. Let's go. So the very first thing that I'm going to do is help you understand the anatomy of the wick rejections. So each time the price goes up and down, price goes up, price goes down, price goes up. Okay, this is the basic movement in the Forex market. We have two moves here. We have impulse, retracement, impulse, retracement, followed by an impulse. Okay, so whenever we have impulsive moves up, that means that the buyers are pushing the price up in the currency. So whenever the price goes down sharply, like so, what tends to happen within this section of the price? So this section now becomes the wick. Okay, it becomes the wick because in that particular session, the bears overtook where the bulls were and they pushed the price down quickly. Okay, so that created a wick. So at first, this is how this section may have looked. Okay, so let's just say this is a 1 hour time frame and the 1 hour candle hasn't finished yet. As the price is going up like this, the 1 hour candle still hasn't finished. Okay, this is where the bulls reached. This is the highest point of where the bulls reached. Then before the 1 hour candle closed, we got a move to the downside from the sellers that pushed the price down. So what that does is that it creates a wick. This is how this section would look. Okay, so this just shows us, because we are reading price action, it's like a language. This just shows us that the bears, who are the sellers, overtook the bulls, who were the buyers, quite strongly. So in the future, let's just say we are looking forward to buying the price from around this section. Okay, let's just say we have our setup. Everybody has a different strategy, but we want to enter the price around here. But we understand that previously there was a strong price rejection from this level. Okay, so how do we use this strong wick rejection to our advantage? Because we see that there's a strong rejection around this section, if we're entering the price from this section, what I would do personally is not enter the straight, because there's a high chance that once the price goes here, it's just going to reverse strongly and potentially take me out of my trade. So understanding this principle of knowing where the sections are within the price and knowing how to read it can actually substantially save your capital. And now that I've showed you the anatomy of the wick rejections, how they're created and what causes them to formulate, I'm now going to show you real chart examples. Let's go. By the way, if you're struggling with your trading journey and you need a mentor to help you understand the fundamentals of the price action and how to capitalize on the Forex market, look no further and click the link in the description section below. So, what are we doing? So let's just say we entered the price around this section. This is where we entered the price. We automatically need to be looking at this section over here. Okay, because that is where the price is going. The price is in the downwards direction and we're seeing that the price is going downwards. Very simple. But there's potential opposition that could come from this section. Now remember, this is about strong wick rejections. Did we get strong wick rejections in this area? The answer to that question is no. Okay, and this is the reason why, even though price came down, we had a small pullback. What caused that small pullback is actually this wick rejections, but they're not strong enough to actually reverse the price, and price continued to go downwards. Okay, now I'm going to show you an example where the wick rejection was actually strong enough to reverse the price. Check this area out. You see this wick rejection? This simply means that we see these black candles, these two black candles. Okay, the bears actually reached this section, and then within that time frame of 1 hour, because we're on a 1H time frame, the bulls pushed the price to the upside very strongly, overtaking the sellers. So we'll mark out that section. So let's just say, according to your strategy, you had a signal to sell the currency from this section. Okay, so you were anticipating price to continue going downwards like this. But what happens? Price gets opposed and it literally goes the other way, and it creates consolidation for 2 whole days. Consolidation means that it means price going sideways. Now this section over here, this wick rejection, actually has a lot to do with it. And let's find one more example. Now you can also use this strong wick rejections as a springboard. Okay, we are in an upward trend. Price is going in the upwards direction. We have a high over here. So this is our day 1 high. This is our day 2 higher high. And then we have a pullback. This pullback is actually going towards this section here. We have a strong wick rejection on the 1H time frame. Now let's not forget that the strong wick rejections can actually be your opposition, or you can use them as a springboard towards your destination. So this is a demand section. Okay, this is a demand section. The buyers strongly overtook the sellers around this point. We mark out the wick rejection, draw it into the future. Let's just say we wanted to enter the market from this section right here. Now let's just see if there was any other wick rejection above where we entered the price. There's nothing which is going to oppose the price from this section going to the upside, but we did have a strong rejection here. Now we are already going upwards in the trend, so we could have used this section over here as our support, as our demand zone area. Now that is exactly how you can use strong wick rejections to your advantage. If you like this video, like, share and comment below. I'll see you guys in the next one. Take care.